it's oil that's the bigger concern and the bigger positive for the Indian markets. Concern for only oil bulls, but positive for Indian markets and positive certainly for the biggest Indian oil company, Indian Oil Corporation. Joining us now is Mr. B. Ashok, the chairman of that company. Good morning, Mr. Ashok. Well, if you can start by telling us what is the under-recovery bill likely to be? How much of a cut will you see in your own subsidy, you think?
Signs are good, certainly for the country, and the prices have been quite stable in the lower levels. And certainly there are no under-recoveries anymore on petrol and diesel that we can talk of. So currently the under-recoveries are only limited to two products, which is kerosene, PDS kerosene and domestic LPG. At the moment, PDS kerosene has an under-recovery of close to 25,670 or so in kerosene per liter, and on LPG it's about 280 rupees per liter. Overall, we think that for Indian oil, we should have a total under-recovery for the year of the order of about 43,000 to 44,000 crore.
Okay. Mr. Ashok, because the under-recoveries will fall so much, how much will your interest costs go down by the end of FY15? I think you paid about 5,900 crores of interest in FY14. What could it fall to?
So if you look at the first half of the year itself, actually this is based on the results which we have already announced. Our interest costs had come down from something of the order of 2,900 crores to about, it's fallen by about 900 crores during the first half. And we think the second half is only going to be a little better than that because the prices have gone down substantially after that. So our interest cost should be, probably less by at least about 30-40%, I guess, compared to the last year, easily.
You had reported, you had reported a GRM which was a negative $2 per barrel in the quarter gone by, because of high inventory losses. For the second half of the year, what is your projection as far as gross refining margins are concerned?
See, when you talk of the GRMs, you have to look at it in two parts. One is that basically whether on the operational parameters, whether we are improving or not. And I think I'm very happy to say that as far as Indian oil refineries are concerned, all our operational parameters have improved substantially. When you talk of operational parameters, we talk in terms of the yield from the refinery, that is the middle distillates and above, which have gone up substantially. The fuel and losses, which are a major component of the refinery's operational expenditure, they have come down to below 9% from above 9%. And the third thing is, of course, the overall energy intensity index of the refinery, which has also shown substantial improvement. So if you look at an operational performance, Indian oil refineries are doing very well. And so from that perspective, the margins are looking brighter. Yes, inventory there have been losses in the inventory. During the first half of the year, we have declared an inventory loss of over 4,000 crore as compared to a corresponding gain during the same period last year. So the net impact of our inventory has been close to 8,000 crores. But going forward, we need to really see how does the crude oil prices behave, and we will have to take a call at that point of time. Coming back to my earlier point that the operational parameters are doing well, so we are quite hopeful that things should pan out well for the rest of the year.
Sorry, sir, you said your inventory loss would be 8,000 crore.
No. I said the inventory loss for the first half of the current year was of the order of around 4,000 crores. When you take into account both crude as well as product inventories. Okay. But during the corresponding half of last year, we had a gain of an equivalent amount. Okay. So that is what has made a difference to our results for the first half.
But how should we see it for the current quarter? And will you have inventory losses for Q4 as well, or would you be very light on inventories?
See, the point is, it's a little difficult to guess on that point. You have seen the volatility of the prices.
So you would know
Crude
current
oil prices
quarter?
were ranging at... No, current quarter, yes. As I said in the beginning, the current quarter, as far as overall crude prices are concerned, have been good and good for the country. Okay, so there has been a marginal dip in terms of the inventory losses have been there, but we do believe that we need to take a call at the end of the quarter. I mean, we can't take it on the basis of today.
Okay.
So looking at the fluctuation in terms of crude oil prices, we will have to see how it behaves. At the same time, let me also say that the product prices are the other parameter which we need to monitor, as well as the exchange rate fluctuations and so on. So it's not a direct, simple calculation of how much the crude oil prices have fallen.
Can you tell us exactly how much the GRMs could improve to?
That's also a difficult guess, but I can only probably give you some indication. If you had looked at our the figures of the first half of last year vis-a-vis the figures of the first half of the current year, our GRMs, operational GRMs had improved by at least more than $1.50 a barrel.
Okay, what's the current profit you're making on diesel and petrol?
See, you must again look at one thing. We are making reasonable profits, but more than anything else, we operate on thin margins. You know, 45% of our product sales are on diesel. So, whereas when you consider our turnover of almost 4.75 lakh crore rupees, see, the profit margins are not very big. But what will really help us is the fact that two components, which is because the under recoveries are going down. We don't think that the unmet under recoveries, if at all there is a component like that, would be there. And the second thing is in terms of the interest losses. So if both these factors are playing out favorably for us, we think we should be able to make a reasonable margin on diesel as well as petrol.
So you're not giving me an exact number. How much is the over recovery in diesel and petrol, if I may ask? Especially diesel, since it's 45%.
There is no over. See, there is no over recovery on or under recovery at this point of time, because both these products have been decontrolled. So what you must understand is we can't take product prices on a daily basis and say that today the crude prices are so much or product prices are so much and so this is what we make. Because these are all not based on immediate terms. You will have to look at it over a period of time. The crude that we are processing have been procured over a period of time and so on. And the product prices have also are playing a role in terms of fixation of prices. Over and above that, there is a factor of this exchange. I mean, when the dollar
has been stable,
or the rupee depreciates.
Exchange has been stable. You have a cushion. Why don't you tell us?
No, you can't look at it as a cushion. You know, as of the first fortnight of November, actually we did not have anything extra with us in both MS as well as diesel. So we take a call on a basis of a reasonable period of time. So you don't look at prices for the day and make it.
All right, we'll let you go on that, Mr. Ashok. Thank you very much indeed for joining us. Well, oil companies didn't take a call on the quarter when prices were rising, but when they are falling, well, they need a cushion for perhaps LPG.